Welcome to Breaking Banks.
Well, I'm happy to welcome Curt Queyrouze back to the show. Curt is the president and CEO of Tab Bank, and we are still here at Money2020. And Curt, I want to hear all about why you're here and what you're seeing. But the Tab Bank story it's a good one. One I like to tell, but I maybe like even more hearing from you. So remind our listeners, what is the story about Tab Bank? How'd you get to where you are today?
Oh, great. Well, thanks, JP. It's great being back with you again. Tab Bank is an interesting story. So I haven't run across another bank that has quite the unique story that Tab does. We're 23 years old this year. It's actually, I think, 23 years old this month. And the bank was originally formed as an industrial loan charter bank by a company that had a bunch of travel centers, truck stops across the country. And the idea was truck drivers have difficulty banking. You know, they're on the road. If you live in Salt Lake and you're delivering a load in North Carolina, how do you then get paid for that load, and how do you buy fuel and all those kinds of things? So, back in 98, 99, the bank was formed, and basically putting ATMs and fax machines in truck stops. A truck driver could stop by, take their bill of lading, fax it into the bank. We would load a card, and they could use that card to go out and buy fuel. And they go out and pick up the next load. And, I like to say, the Tab Bank was doing mobile banking before the mobile phone really could enable it.
Right.
And from that beginning, as things evolved, eventually that truck stop chain was sold off to another company, merged into another company, and Tab stood on its own. And so there was a natural progression from where we were. We've never had a branch in our history. We've always done business over the internet or through fax machines. And so it was natural for us to kind of pursue this digital banking kind of environment. So we started that path in digital conversion probably 7-8 years ago. And, now from that, today we still serve a lot of truck drivers. That's our core. That's a community. And, we are, in my mind, we're a community bank whose community exists all over the United States and is a fundamental part of supporting the U.S. economy. We couldn't live without truckers. But they are their unique community, right? And so instead of the people in my neighborhood and the people I know, down the street or around from the playground or my kids' school, our community really for Tab Bank exists with the unique truck drivers and their problem set. So that's half our business. And then we've, over the last few years, evolved into partnering with fintechs and really with a focus on, small business for us directly. And then through fintechs, we serve consumers. And we have 6, soon to be 7 partnerships, deep partnerships with fintechs. And we use that really to take our bank model. And then each of these fintechs serve different constituencies and such. And I think as we kind of move along, that's the future of where we see it going and how Tab Bank's going to play. We're going to be a provider that really supports and gives the banking infrastructure to other players that are serving unique communities or unique product sets.
Well, it is a great origin story. And like I said, I like telling it myself as I talk to other banks about, look, just being a smaller version of Chase isn't going to make it, right? Understanding who your customer really is and how to put the right collection of products and services around what their unique needs are is really what the path looks like.
Yeah, as a matter of fact, sorry to interrupt, but you said that because our chairman years ago, our former chairman, I was trying to get approval to invest in our first, modern data platform. And he's like, I don't understand why we're going to spend this money because, you can't compete with Chase. And I was kind of taken aback. I was like, well, wait, the idea is not to compete with Chase. It's to just fill in all the spaces that they don't serve well, right?
Right. And how big's the bank these days?
We're about $1.2 billion in assets.
Yeah, continuing to grow.
But
at that size, there aren't a lot of banks your size here at Money2020. So why are you here? What are you looking for?
Yeah, so as we continue to evolve and we see things moving along this pathway where the size of the bank. Well, let me back up and say. Everybody focuses a lot on scale, right? Size and scale. And certainly in the banking industry, we've been talking about it for decades. I've unfortunately been in banking for a long time, many decades. And we've always had these conversations of you can't succeed without scale. right? And we've seen the consolidations and the biggest banks get bigger and bigger and bigger. And, they continue to try to be all things to everybody. Well, the unique thing that happened in the last decade, 15 years, is that, technology has enabled small banks now to provide unique and bespoke services using technology to lower their cost of delivery, to do all these other things. And all of a sudden, small and nimble now potentially is a giant slayer. Not that we're going to, again, go compete with Chase, but there's so much space that big players don't do well. Of course, all the fintechs here see that as well. And so together, I think the future of banking isn't going to be how big you are. It's going to be how well you can partner and how quickly you can do it.
Well, I agree with that. And when I think about scale, I think about relevant scale, right? There are pieces of the business that need scale, and there's different ways to get scale through external partnerships. And you're one of the very active members of the Alloy Labs Alliance, the way banks are working together. But I also agree that unless you're really one of those that already kind of won the scale game, it's going to be pretty hard to win from here on out. And you really should focus on the customer intimacy, and that's what you've focused on.
Yeah.
So you talk about the future of banking. What's the future of Tab Bank, and what are the kinds of things that you're looking at here at Money2020?
Yeah. So I think So probably can't talk about it without talking about banking as a service, right? Because as we've talked before, it is a buzzword. It's hot, and so everybody's in banking as a service, in some way. And what does that really mean? And I'm not sure. I want to sit here and try to put my own definition out there, but I'll tell you how Tab Bank views it. And I think there's an analogy to the last 10 years, say, when traditional banks were trying to go digital, right? And the pattern that we saw was, we're going to stand up a digital bank next to our traditional bank.
Right.
Well, what inevitably happened was the digital bank and the traditional bank are trying to serve the same customer. Well, the business model is completely different. And, so the profits made at the traditional bank, if you're going to go digital, right, the whole idea is to lower the cost, which means lowering the revenue to the bank in their traditional model. So they would compete, right? Politics, internal fights, and how many digital banks were stood up, did a great job, and then were shut down. Right. I mean, there's a lot of names we can throw out. So what's interesting to me today is, because we're a bank that we consider ourselves now a digital bank. But we do it with legacy cores in the background. We built a middleware that allows us to serve customers in a digital way. So we pull all the data out, put it in one place. We can move it at speed. And then our digital interface, right, is on mobile phones, and we're partnering with leading edge tech companies to provide that. So for us, we still have that legacy infrastructure, but we don't have the legacy business model, and so we're standing up a digital bank. But what we're standing up is a digital BaaS bank, right? And so the idea is that digital banks not really set up to solely serve our customers, it's set up to serve fintech's customers. And so there's lots of platforms out there, Technisys and Mambu and Q2, et cetera, that have modern cloud architecture that's not quite ready to do all the things I need it to do for my traditional business. So I'm not ready to rip and replace, but is perfectly suited for the models that the fintechs have, right? And so as they build a platform and a system of record, we're gonna then build a digital bank that serves fintechs. And that's kind of really our main focus of being here this year. I mean, over the years of coming to Money2020, it's been something different every year, but that's where we are. And that's kind of what we're building for the future.
It's interesting what you just said. It calls to mind a conversation I had earlier today, and to your point that banking as a service, BaaS, is a little bit of a buzzword right now, means different things to different people. And it's funny, you came up with the same thing I said just earlier today it was the same thing around digital banks or neobanks. There's a flavor, not quite of the month, but about a 3-year cycle, right? There's about a 3-year cycle of something is the hottest buzzword and everybody has to pursue it. And unfortunately, about 80% of the people don't seem to really understand why you would want to do any given one of those strategies, or to your point, how that impacts your existing business model, the decisions you would make about resource allocation and the technology that you would use, and all of that. But clearly you're thinking about this pretty long term. That and I guess maybe one more thing I would add: just the fact that you're digital. You talked about the banks that have gone, right? The come and gone, the neobanks. The fact that you're a neobank doesn't mean you win. And I think the flip side of that is, okay, if you're a bank, and what you've recognized about banking as a service is, we have a bank charter and fintechs don't, and there are a lot of fintechs out there who need some element of a bank charter, whether it's card issuance or deposit gathering tools or whatever it is. But the mere fact that you're a bank doesn't mean you win in the BaaS world either, right?
No, not at all. I mean, for us, I think a lot of fintechs are attracted to a bank that's under 10 billion, right? They want that Durbin exemption so that they can get that revenue model. Right. So that makes it
more
easy.
Favorable interchange rates.
Right, more favorable. So it makes us an attractive potential partner. But yeah, you don't necessarily win. So as you go into this partnership, if you're an old banker, right, like us, right, it's like you think about risk management, and you think about diversity of revenue sources, diversity of credit risk, diversity of all those things. And so as you go into these models, the fintechs are very focused on solving one unique problem, typically, right?
Right.
As bankers, you realize that it may work, it may not, right? And so as we're beginning this partnership, or as we're moving forward with a partnership, we also want to also have multiple partners that that we leverage our bank charter with, and so that we can kind of serve a broad set of consumers and constituencies, right? Not all in with one. And that requires a whole different way of thinking. I mean, I worked at a bank, decades ago, where I sat in the lobby as a senior commercial lender with a beautiful hand-carved oak desk, and I had a phone under my desk without a dial pad on it, and I would pick it up, and it would ring. I hate to even say it because I don't want anybody, this isn't my words, this is what it was back then, the secretarial pool on the mezzanine. Uh-huh. And you would have to say, get me such and such on the phone. And then the CFO of a publicly traded company would march down to the bank and sit in the chair next to your desk and do your banking, right?
Right.
And so this whole world of, now moving towards how do we go where the customer is, where they are where not just physically, but in their financial journey and, whatever they're doing, and how do we find a way to do that transaction at the point of transaction? And that's a really interesting thing, right?
Yeah, for sure. So is there anything in particular that you've seen this week that is really intriguing for you, either along those lines, or is there any new thoughts coming to mind as you're seeing some of the technology here?
Well, I don't think I've seen a whole lot of technology at this event that surprised me, right? Because we've been sitting locked up for a long time, and so we all we have time to read and explore and see what's going on out there. But I see a maturity level in how people are approaching, and then the depth of some of these technology players and platforms and fintechs, where they're really starting to mature, and so it's interesting to see that. And then the only thing that is, it's not new, right? It's been around for years, but the whole crypto and EFT world and all the digital assets,
blockchain and DeFi,
all of that has reached a point where it's time for the banks to really take it seriously and move in. And there's a lot of players here that I think are going to be the enablers, right?
Yeah, it's definitely reaching. There's still plenty of wild west in that space.
Yep.
But there's some real grown-ups here talking to real live financial institutions too.
Yeah.
So it'll be interesting to see how those use cases continue to develop.
Yeah, you always talk about following the customer, right, or serving the customer, putting the customer first.
Right.
And I think that's true. For instance, we're partnered with a company called Bumped. right? And so we're launching a checking account product in January that basically with your debit card swipe, and this is the interesting thing to me about it, is with your debit card swipe, instead of cash back, you get shares in an ETF, right, in a fund, stock fund. And not only you have that, but they have retailers and other publicly traded companies that if you swipe with them, you'll get 2% back, say, instead of 1%. Complete differentiator, but the thing I love about it is, the customers, they aspire, because we serve the underserved, generally speaking. The customers aspire to have access to those things that they don't think are within their reach. And one of those things, is owning stock in a company, right? And so this is a way for the underbanked and the paycheck to paycheck crowd to start actually, experiencing that world of stock ownership. And I think crypto, all of those things as well, a lot of the community out there that is in so much need, they see that as their opportunity to finally win against the system, right? And so if the customer wants crypto, or if they want, to go into that world, then, if we're going to be the stewards of their financial well-being and we have to go there too, right?
Well, that's right. Well, what else? Anything else we should talk about that's on your mind or that you've seen this week?
Well, there's so much, right? Isn't this an overwhelming experience? It's like you walk around the rooms upstairs that I look around. It's like, ooh, where do you start? So, I think that's a lot, isn't it? That we just talked about. So
it is. Yeah. Well, always great to see you, and good to be seeing anybody at this point
it's great to be
our
out,
lives, right? But I'm glad to get your kind of unique perspective on this as a community bank, and always a pleasure having you on the show.
Thanks again, JP. Thanks. See you soon.
We continue at Money2020 now with Roger Gu and Rebecca Sheehan of Emburse. So you've just made a big announcement. Tell us about that.
Thanks, JP. Yes, we did. We are thrilled to announce that we are now partnered with SVB, who can now easily issue and manage virtual cards for our mutual customers through the Emburse card dashboard. So it's a really exciting announcement. Really, what we're hearing from banks is that competing for customers is getting harder and harder. And there is growth in all types of spend, not only T&E and invoice spend, but what we call long tail spend. So spend that was historically done by procurement folks or centralized buyers. And banks really need to be able to help capture that spend. So there's a need for this partnership grew out of the need for technology to be able to help banks like SVB be able to better compete for customers, retain control, grow their share of wallet, and really simplify purchase reconciliation. So we're thrilled to be partnered with the folks at SVB to bring this to market.
Now, is that your first bank partnership, or do you partnered with other banks?
SVB is our first bank partnership, but we are trying to be an open platform, right? We don't want to, we have Emburse cards today that we issue for clients that, they want additional controls on the cards. But a lot of our clients, be it SVB clients or Chase clients or BOA clients, they like their existing bank partner. They like the rewards that they get. They like the lounge access, all the other perks that they get for all the treasury management services from the back end. But they do want some of the more integrated UX. They want the newer technologies, real-time alerts, real-time or even no reconciliation required expense reporting. And so that's where our partnership model and this open banking model really comes into play, where we can really work with a number of different banks to enable their customers and the basic average users, right? We're at this conference. How many expenses are you going to have to submit here?
Right.
We want that to be extremely minimal experience for the user. That's what it's about.
Right. And this is a recurring theme that we've been exploring this week. The level of complexity when you're talking about business payments and business processes is so much higher, right? It's not just getting the money from point A to point B, as someone else on the show said. And that part's pretty much been solved already, right? It's all those other things that happen before approving the payment or reconciling the payment and processing all of that. So talk a little bit about what are the pain points that you're seeing in the ones specifically that you're addressing with your product.
So we find that, with a lot of these employee expenses, like our software initially was, okay, you spend something, you have to submit an expense report, you have to add some notes to it, what it was for. But like a lot of these expenses today, especially with SaaS and recurring expenses, you don't need to have the user manually input all that data, certainly not each and every single time. If there was a pre-approval associated with that, if there's an invoice associated with that, we should use the technology to really simplify the user experience. Right. So that's ultimately, it is a lot of fancy front end that the user sees, but behind it, it's so much more in regards to the back end to make sure that the user experience is really as simple as possible. We want it so that, no one likes doing expenses and no one likes submitting invoices or reconciliations. So that's what we're really trying to really just simplify. And then with, a bank like SVB, they have their clients are very complex. They'll have employees, they'll have contractors, they'll have candidates that come in for recruitment. It doesn't make sense to give them access to a standard card. Doesn't give them access, or doesn't make sense to perhaps give them an expense account. So it's just easier to issue a virtual card that they can use and spend and not have to worry about anymore.
And I would add to that an important nuance here is that traditionally, expense and spend was managed after the fact. And so by issuing virtual cards, there's you have the ability to proactively manage spend. So by having an employee request a card in advance for a certain trip, a certain expense, or for a certain period of time, you're enabling a company to proactively manage that spend before it even happens.
And what are some of the other advantages of virtual card? I mean, some are easy to imagine, but I think there's some beyond, not having to wait for plastic to be printed and all of that. What are the advantages of using that as a vehicle?
So I think there's actually very little distinction with the use between virtual cards and physical cards very often. So I load my virtual card into my Apple Pay wallet, and for 90+% of my transactions, I'm able to use just Apple Pay. The only complication now is these days sometimes a few restaurants won't accept it, or it's a little bit annoying when I have to, because I'm wearing the mask and it uses the Face ID, so it's a little more annoying there. Right. But for most my day-to-day expenses, especially because I don't go to the office as much these days, there's very little in terms of the differences between a physical and a virtual card. We find that virtual cards are just much more flexible when it comes to online expenses. Obviously, you can issue a card that expires after a certain project. You can issue a card to a temporary contractor. And you can issue a card for one-time vendors. And it's just a lot simpler experience in issuing these virtual cards than using a static physical card number. So talk about how you got to this point. What was the kind of original vision of what was happening in the space and the pain points and the opportunities to create some new solutions? So certainly, and there's a lot of entrants in the space that are really trying to replace the existing bank cards. Mm-hmm. So we started off with that solution as well. But after my cards company, which was then known as Emburse, which was acquired by now Emburse, the clientele that we were serving ranged not only from like tiny startups, but to companies that have 10,000, 50,000 employees. And there, we weren't going to realistically say, hey, company A, rip up your 5,000 corporate cards and use our cards instead. That's impossible, right? We can't replicate any of the treasury management services or any of the back-end services or even compete on the economics against the bank, nor would we want to. And so as we're serving these larger clients and enterprise clients and even decent-sized corporate clients, they liked the existing banking partnerships that they had, and they liked the cards that they had, but they wanted just more. They saw what was being offered by Emburse cards. They saw what Brex, Ramp, and Divvy were offering in regards to real-time controls. And they were telling the banks, hey, we want this too. And Silicon Valley Bank and certainly a lot of other banks see that. And so that's where this naturally came from. It was a desire to better meet the needs of our mutual clients within the space.
So where does the product roadmap go from here? What's the next frontier?
So now what we're seeing is on twofold. Like one is we're seeing the blurred lines, as Rebecca mentioned earlier, between spend and expense. So we want to continue with that and help clients, for folks that want to enable their employees to purchase LinkedIn or Zendesk or whatever it is, to have those expenses happen on their corporate card, which traditionally didn't happen. Like we want to be able to have analytics and be able to support these recurring purchases and capture more and more of the spend. We want to do this because, because of interchange, but more so we want to help the clients have a better visual representation of what are they spending on today? What are they spending on right this second across all their vendors, and get better data and analytics in regarding their spend, and hopefully, be able to reduce that spend across the entire company. Second, we want to work with our banking partners to do even more. So beyond maybe just virtual cards, but other things would be physical cards, certainly more in the T&E space, and very much so help with the B2B payments and bring more virtual card transactions and digitalized transactions in general to that space for efficiency reasons.
Well, give us an idea of where Emburse is as a company, in terms of traction and size and funding and all of that.
So Emburse today has about 16,000 clients. We are actually represent several different business units, several couple brands. So there's Certify, Abacus, Chrome River, Captio, and Nexonia. And so each of those BUs represents essentially is dedicated towards a certain segment size, right? Abacus tends to be more startups and smaller corporates. Chrome River serves a number of large enterprises with 10,000 to 75,000 employees. So each of those is it's very much custom for that segment size and for the industry. And I think that's where we really specialize against some of our competitors. We have about 850 employees today, and we are spread out now throughout the United States, but mostly based out of Portland, Maine, and Los Angeles. We are entirely backed by K1 investments, so we're not VC funded. We are striving towards profitable growth. So we have a pretty global reach, and we're really trying to determine our product roadmap and our expansion needs based on the conversations that we're having with our banks partners today, as well as clients across all segments.
And what brings you here to Money2020? Are you looking for partners, bank partners, technology partners? Why are you here?
So that's a great question. We are looking for more bank partners, of course. We are also looking for other distribution channels. So we think that cards, expense, travel certainly makes a lot of sense for folks to. We want to augment the services with additional data. We want to augment the services with some of the providers here. I met a vendor that says that they can fine-tune some of the controls on our cards beyond just MCC to very detailed MID data, which I thought was very interesting.
What's MID data?
So MID is merchant ID data. So perhaps you want to restrict a card that can only be used at restaurants. But you also want to allow for things like Uber Eats. You also want to allow for things like Grubhub. And sometimes Uber Eats might be classified as taxi and limousine service as a merchant category code, which is, of course, not correct, right? So if you give a card to someone that they can use for restaurants, you want to be able to take out to get these services like Uber. So you can add the MID, the merchant ID of Uber Eats, so that you don't have to add taxis in addition to that.
So you're able to give finer tuning on the controls
exactly fine-tune controls, and we can also look for we can also blacklist for say that we don't want folks to be able to use these cards at certain merchants, or maybe it's a competitor or something like that.
Okay, cool. Well, what else should we know that we haven't asked you yet?
I think in general, this is just a first step as we look to expand our footprint regarding payments. So we process tens of billions of dollars a year in expenses, but we actually touch very little in regarding the payments of that. Our clients are asking for more of that because they want to be able to see the data a lot more clear. So nowadays it takes 3 days for the settlement data or card transactions to actually hit our systems. So they want more real time. They also want more. They want us to do more integrations with additional banking partners, and as well as different travel management software services. And we're seeing, during COVID, certainly we saw a huge drop within travel, but nowadays we are seeing that certainly pick back up. I mean, we're here in person in Vegas.
Right.
We want to be able to reinvest in the travel segment as the travel recovers more and more in 2022.
Great.
And I would add to that Emburse, really our mission is to humanize work, and really by that we mean making work not feel so much like work, particularly when it comes to administrative tasks. And so you'll see that focus on employee experience and ease of use really woven through all of our different solutions, from our travel solutions all the way through to our payment solutions. So that's a critical mission that we're on.
Great. Well, good luck on the rest of the journey, and thanks for joining us.
Thank you so much, JP.
Here with Phillip Ashley Klein from FinLynk, FINLYNC. So, Phillip, tell us about FinLink. What do you guys do? Why are you here at Money2020?
Yeah, I mean, it's a big question. I think where I'd start is, I was just chatting to someone before, and I was saying, so much value has been created in consumer, SME, financial services. So many billions of value. And now as a consumer, and even in the SME world now, you have very much instant, seamless connection to your money. There's so many ways to deal with your money. But more money lives at the corporation level. The Walmarts, the Sonys, the Microsofts of the world. And this is really a global problem to solve, not regional, as we've seen. Many companies really solve sort of a country or regional type problem. So what we really believe, and we're already seeing, is that corporate financial services will go the same way as consumer and SME. And we're very much just at the beginning of that. And that's really at FinLynk, where we're trying to do something quite big, which is really transform global corporate financial services. And I can unpack that a little more as we go.
Yeah, well, first of all, we agree with the premise that I think we still have a long way to go on the consumer side, but it's maturing, and there are a lot of people here doing similar things. I have noticed this year we are putting a little bit of a special focus on small business and commercial applications, and we're seeing more this year than we've ever seen before. But I agree, I think we're still in the early stages. So yeah, how are you attacking this problem? Well, first of all, what are the top 1 or 2 or 3 pain points that you are trying to address?
Yeah, well, if you sort of think sort of the analog to the consumer is, the office of the CFO, the treasurer, the finance professionals, and just incredibly archaic. I mean, they don't know where their cash is. They have very limited cash visibility. Tens of hundreds of millions of dollars of trapped cash. They send payments in files. They don't know where the payments are till weeks later when a vendor calls them up and says, "Where's my money?" They're financing invoices and sending manual documents. So as you sort of see the transformation we've seen in consumer from the days where we used to get a bank statement in the mail, now it's you open an app and everything's instant. Corporate world is not there yet. I mean, they're very much still in a bank statement. They receive bank statements. They have to reconcile them. They see their cash visibility as part of a ledger. There are no applications to instantly open and see where your money is to manage your money. It doesn't exist. And really, that is what we are doing at FinLink.
Well, it's kind of like the pre-PFM days of the consumer, right?
Exactly.
And a lot of those pipes haven't been built yet. Yep. And a lot of those systems aren't talking to one another, right? They're all individually. So how far along are you in the process?
Yes, I mean, we've aggregated really all sort of global banking institutions, but not just banks, really starting into the fund management space, cards, market infrastructure providers. These corporations have 50, 100 banks globally, and then they also connect into, like I said, asset managers, fund managers, credit card companies, etc. So there is no sort of let's connect 3 banks and the consumer and you're good, you have everything. This is the sort of magnitude and the sophistication is much bigger. So we've now connected pretty much all the banks that have APIs built globally, aggregated those into a one point, and then we've built embedded applications. So really big difference between, I think, consumer and corporates is this consumer world. You can have these companies like a Plaid or an MX who can provide an API for fintech companies to build on. It doesn't really work like this in the corporate world because corporations have existing infrastructure. They have very stringent security concerns. They have monolithic systems of record. So it doesn't work like it does in the consumer world. And we sort of really saw this early on as open banking was really hitting corporations, but there was virtually zero adoption. Besides real-time payments at e-commerce companies, there was zero adoption of these banks' APIs. Because what you would have is, a treasury salesperson going to the CFO, of a Sony, and saying, do you want to see real-time visibility of your balances in an instant? Because at the moment, they're receiving files of bank statements from 100 different banks. And they would say, of course I want this, give it to me. And it would be a 200-page Word spec. It would go to IT. IT would come back 3 months later and say, well, this is a year project. And this is one API from one bank. As I said, these corporations have 100 banks and they want 20, 50 different API, different types of functionality from their bank.
And all the APIs are different.
Exactly, yeah. And there is a real difference as well in the corporate world is if you think of PSD2 in Europe, this is a standard.
Right.
US, we've seen something a bit different. We're sort of screen scraping and backing into APIs and Asia as well. But at the corporate level, there's no regulation driving standards. So the banks have each built out a completely different standard. And what's actually happened is that standard has become a competitive advantage. So the banks don't want to share these standards. And now there's so many APIs being built by so many banks, there is no way to create a standard. So what we have done...
Is anybody driving for that? First of all, from the regulatory side, is there a movement in the early stages for a PSD2 for commercial?
I mean, there's always institutions that will talk about these things, but it's just completely impractical now.
Yeah.
It would be impossible. And this is why at FinLync we took a very different approach, which was technology-led. And we said, build what you want. We'll take it and we'll create the standard. And that's what we've done. So we have harmonized and aggregated all these different standards across all these offerings from banks and fund managers, everything from getting real-time transaction visibility. Like you're paid in real time now as a company, you want visibility in real time. And everything to trade finance, like invoice financing, getting that information out of your system in real time to your banks, from immediate financing to cross-border payment visibility. You send a payment, from the US to Singapore. You have no idea where that payment is, what it costs you, how long it's going to take. Now you can track that payment like a FedEx tracker in real time. So it's quite transformational now, sort of what's possible, what we've enabled essentially.
So you're taking on that role. That, look, nobody's going to come in and make them standardized, so you're just going to take all the mess and put some order to it and present it out to the corporations.
Exactly, yeah. And then you can present that out in a few different ways. So you can provide that data, that multi-bank real-time data, and that corporation can decide to build off of that and build what they want or integrate it into their systems, or we've built embedded applications ourselves so you can embed them plug and play in existing systems. I think, sort of difference again in consumer is, you download an app on your phone and you're live. In the corporate world, this big, all this archaic technology that's been around the last 20 years, it's 2-year implementations, 3-year implementations, it's millions of dollars. And now you have an API you can embed. You don't need to do this. If you can build the embedded application, you can really go live in a matter of weeks with hours of effort. And there is no professional service projects that go on forever anymore. And this is what also we're really trying to change.
What has been the most difficult thing you've had to tackle so far?
Yeah, I mean, it's a good question. I would say, the biggest challenge would be on the bank side because, at the end of the day, fundamentally, we're building off of banks opening up. So the speed at which they open up and the quality at which they build these offerings is, that restricts, sort of the growth of the entire market. So what we've done is we've tried to accelerate that. So as well as becoming essentially the global standard for this, we're advising banks. So we're really helping them build these APIs. So you have, banks who are coming to the table now who want to start building and they want to leapfrog. They don't want to go through all the pitfalls and pain that other banks have gone through to build these standards. And because we've seen the best in class from all the different banks and aggregated this, we can actually offer that advice now to banks and help them just leapfrog to what is best in class as quickly as possible.
Are you getting into some of the mid-size or smaller banks that don't even have the APIs yet, or are you still playing with the pretty big multinationals at this point?
Yeah, it's a really good question. I mean, sort of take a step back, and it's kind of like this two markets for APIs. So there's this sort of public open banking market, and then there's these premium APIs, which are really sort of the behind closed doors. So these aren't on the bank's website for anyone to come and grab. This is, like I said, it's like a competitive advantage spec. So they're not just out there publicizing them. You've really got to have clients that are asking for these APIs. So what you've seen is, I don't know, say 30, 40, 50 of the biggest banks around the world have got some offerings, some API offerings. Now you're looking at the next tier down. And that's where we see now these banks are realizing they need to start building this. Because what we've seen even with customers is they have moved payment business to banks that have the technology when other banks are behind. Because why are you waiting for this bank to get live? Could be another 6 months when you can have real-time cash visibility now and invest that money now and get those returns today. So it's quite an exciting shift we're actually seeing in the industry, is that move for corporations actually moving business based on bank technology. Hello.
Well, you come to this with a background in capital markets and trading. I mean, is that part of what led you here, or is this unrelated to your prior background?
Yeah, I think it's quite a unique story. So I actually founded the business with my brother, Peter, and he's based in Singapore. So, he'd been there about 10 years. I've been in the US about 10 years. And he also sat on the corporate side. So he had implemented cash management, treasury, bank connectivity into many of the Fortune 500. And I'd sat on the bank side, and I'd done this world of transaction banking and treasury, but also I'd spent some time in wealth and consumer, and I'd seen the transformation there. So I think us coming together with a kind of global perspective and from both sides of the problem, we saw very early on kind of what I was saying, which is this is going to go the same way as consumer SME, and it's just the beginning. And if we can really build this platform, we can be the player and the standard in the global market for corporate to financial services connectivity.
So what brings you here to Money2020? Are you presenting, announcing, looking for partners, funders?
I think it's a great place to network. I think, fundamentally it's a place where you can meet a lot of people and explore a lot of opportunity in a short space of time. I think it's nice to be at somewhere that's a buzzing conference like this after a couple of years, I suppose, off the circuit. But yeah, I've been quite surprised. There's a lot of new companies in this consumer space. Like you were saying, JP. More and more applications and more and more apps. So yeah, I just find it very interesting. You come here and you see this continued development in this consumer SME space, but virtually no one in this corporate market, which is a bigger market. And this is really, and I think it's, you were mentioning to me before Peter Thiel, and it's like, his framework of you sort of x-axis, boring to exciting, y-axis from simple to complex. And you see a lot of, I think, startups in the sort of simple, exciting world, right? But this sort of more boring, I say more esoteric, kind of complex world, you see a lot less, and this is really where we sit. But this is where the opportunities are. This is where least people really can see what the opportunity is, and the bigger markets are.
Well, I think there are bigger leaps to be made. Right, we're at the stage on the consumer side where there's a lot of incremental improvement that's going on.
Yep.
There is a huge bell curve distribution of adoption, certainly from the financial institutions, and I think somewhat from the consumers, although consumers are kind of leading that. And then, ironically, when we think about the corporate market, treasurers and CFOs and CEOs, they're consumers too,
Yeah.
right? They're experiencing a rapid increase over the last decade of connectivity and availability of all kinds of things through a touch of an icon on their phone. And to your point, they step into the office on Monday morning and there's envelopes full of paper or maybe some CSV files, right?
Yeah.
At best. And so being able to kind of put some order around that and give them the power to be able to manage that real time across multiple banks, multiple currencies. There's a lot to tackle there for sure.
Yeah, I mean, and they've sort of historically been seen as cost centers, and they're not. I mean, there's a lot of revenue to be made. If we have real time data, shipping goods immediately, increasing credit limits immediately, allowing customers to buy more goods. Investing immediately, investing smarter, better, for better returns. I mean, there's a lot of uplift here that's just been sitting on the table. This sort of lag of working capital, but having that in real time and efficient, I mean, it really is quite revolutionary. And I think the market is starting to understand that they can actually get that, and it is possible. And it's a very exciting time.
Yeah. Well, what did I not ask you? You were hoping we could talk about today?
Oh, wow. I think you've asked me some great questions.
Well, good. Well, how can people find out more about FinLync?
Yeah, I mean, website will be at the AFP, the Association for Financial Professionals Conference in DC, early November. I think this is a really big one for the CFOs and treasurers, and we're really excited about that. We got a lot going on. So, yeah, I'd love to meet people there.
Great. Well, thanks for joining us.
Yeah, thanks so much for the time. Appreciate it.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.